Everybody chill. The first month of 2018 stats are in and they're not as bad as you think it is. Stay tuned to this episode of Prime Properties TV. I promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. I'm so glad you joined us here. In this week's episode, we'll be going over the frigid cold numbers in the frigid cold weather that we are having right now. If you've been following along to my newsletter, which I highly recommend you do, there's a link in the description below to subscribe. You'll know to be expecting rapid declines in average prices and sales volume because we're comparing from year to year. And last year in 2017, early 2017, it was the hottest start that we've ever seen compared to right now, which is a steady but not so sexy market. So here are the important numbers we're looking at. Of course, the number of sales are down, so I won't even bother with that because it's so obvious it's a trend now. So let's move on to the average prices. Everybody wants to know about this. So here are your average selling price for the first month of 2018 was $737,000, down about 4.3% from last year. Everyone chill, don't panic. Just like the weather having, keep expecting to see these numbers since early 2017 was so crazy and unbelievably hot. Remember, this is a year-to-year comparison, like I said before, so expect these numbers to be declining until about May, last year in May, when the Fair Housing Plan came into effect. The silver lining to all of this is that if you look very closely at the numbers, and I'll put it in the chart below, the 905 detaches is dragging the average price down. If you look strictly at the 416, including detaches and freehold, you'll notice that even compared to last year, prices were up 5.18% from 727,000 to 767,000. It's the 905 that is down 10.25%, 10.25. That's from 792K to 718K from last year. And the shift to affordability is happening now because no one can afford those. Now let's move our attention to the month-to-month stats, which I've broken down for you in here. And as usual, it's a better indicator of how the market's going. And if you want to see where these stats are from, the link is in the description below. We'll notice that the average price is steadily going up in the 416, even though listings are going up and the number of sales are down. We're continuing to see a new surge of new listings despite prices going up and sales coming down, which honestly may sound kind of counterintuitive if you really think about it, but there are many reasons for that, and one of them being that sellers are actually testing the numbers in the market right now just by putting stuff on the market and sometimes taking it down. But the bottom line is when I look at the new sales to listing ratio in the 416, it's still hovering above 60%, which is a good indicator that it's a seller's market, which means that a good property in a good area that shows well will still sell. Now, the opposite could be said of the 905. It's so bad in the York region, which includes Richmond Hill, Vaughan, and Markham, that the sales to new listing ratio for the first time ever is below 40%. First time ever. That means it's a buyer's market. Now, let's shift our attention to the 416 condos, which we've always been talking about. And they continue to dominate the sales volume, meaning the number of transactions in the 416, making up over 2/3 of the sales in 416 in January, with consistent price increases. No surprises here. Now, one of the interesting things in the sector that I've alluded to in the 2017 market recap was that there was a startling appreciation in townhomes in 2017, and the start of 2018 is no different at all. So looking really deep into the townhome numbers, it's obvious there's a large cohort of people who are still able to own a freehold, are still kind of within reach. They're pushing themselves very hard to get it. We're seeing appreciation numbers of 18% year over year right now, which is crazy. The areas are very particular from the looks of it, and if you're a TREB area expert, it's CO4, CO5, 7, and 9. I'll put it in the map over here. It's going to be highlighted in area, or in basics English, it's just basically northwest of Yonge and Eglinton and east side of Rosedale. That's where a lot of townhomes are doing very well. We'll likely continue seeing these trends in the coming few months with steeper declines in 905 for a few more months and moderate increases in the 416. Here are some tips that I have for everyone this year in this current market. If you're an investor, a smart sizer, or a first-time home buyer, move quick. The logjam from the lack of supply in real estate is real. If you're an upsizer, this is a golden opportunity for you because your current asset is worth a lot, whether it's a condo or a townhome, and the detaches and the semis are actually coming down in price. So that gap in between means you could actually buy a very nice property because you have that golden little opportunity in between. I hope this guys helps and sheds a little bit of light onto where the market is right now in 2018. Thank you guys for watching. If you learned something, make sure you click the like button. If you enjoy the videos, make sure you subscribe to Prime Properties TV right here. If you have any questions, my email is down here right now. And until next time, guys, happy real estating.